Good morning, everyone. Good afternoon, wherever you are. Let me first thank API Events for organizing this edition of the West Africa Property Investment Summit. We are seeing the real estate market stabilizing in Africa, I think, thanks to the continuous health measures in place and the prospect of a vaccine. But because of the ongoing restriction to travel and therefore the challenges to meet, I think it's important for all stakeholders in the African real estate community, despite some understandable webinar fatigue, to remain connected and to collaborate. And of course, to discuss the latest development in the African real estate space, including in Ghana, the topic of this session, which has been for more than a decade now, a hotspot for investors and developers. A few preliminary thoughts before we start the discussions with our two panelists. As everyone knows, Ghana is and remains one of the fastest growing economies in Africa, well known for its stability. Despite an estimated GDP growth for 20% lower than 1%, Ghana is still one of the few African countries not going into recession this year. May I remind everyone that only when you look at sub-Saharan Africa as a whole, it is expected to contract by 3% this year. So prospects for continued expansions are good in Ghana. It is estimated that the country will grow by about 4% for the next few years or so. Thanks to the speedy response by the government from early March to impose sanitary measures, Ghana has been, as far as we know, moderately hit by the pandemic. However, aside from the healthcare impact, the pandemic will also have, as we know, a significant impact on the economy. We should also mention that 2020 has been and is still a sensitive year for West Africa on the political front, with the presidential election in Ghana in, I think, about 10 days. And in the neighboring countries in Côte d'Ivoire, which held its election end of October, and in Burkina Faso last weekend. To discuss these and the Ghanaian real estate market, I'll be today and for, I think, about the next 30 minutes or so with two well-known experts of the Ghanaian markets. First, Holger Adam, Head of Real Estate Development at Clifton Homes, specializing in the construction and development of designer apartment, townhouses, and condos in Accra. And Chris Titmas, if he can join us, I don't see him on the screen. He's a director with Profica, the Pan-African Projects and Construction Management firm. Kafir, should we wait for Chris to join, or should we start?
Continue. I think Chris is having an issue, technical issue.
Okay, no worries. We can maybe, so we'll start with Holger. Holger, we can maybe begin this session with a short introduction of your experience in Ghana. Holger, maybe we can start with you while we're waiting for Chris to join us.
Absolutely. Thank you very much, Ivan. Hello, good afternoon, everyone. My name is Holger Adam, as mentioned. I'm the head of real estate development at Clifton Homes. We are doing mid to upper market residential space, predominantly some mixed use as well. Over the last 4 years, having carved out an interesting niche in the market for us. Prior to that, I was the head of the Ghana operations for Endeavour here in Ghana, and before that, I worked as developer in the oil service sector in Nigeria.
Thank you, Holger. Chris, you missed my beautiful introduction speech, but we can go straight to you. Maybe the idea here was, before you join, I've asked Holger just to introduce himself, and so I'm going to ask you to do the same, and possibly also your experience in Ghana.
Yeah, sure. Thanks, Ivan. Hi, Holger. Yeah, so I've been in the game for 30 odd years in terms of property development, construction. 90% of it has been in Africa, across all sectors, or continents, from Principe, the little island, and Santa May, little island on the west coast, right the way through to North Africa, to Tripoli. Sort of done it all, and a little stint in Middle East, in Dubai, the usual thing that so many of the guys do. But yeah, so and what I've done is I've actually lived and worked in those places as well, so it tends to give you quite a nice perspective. Been in Nigeria for about 7 years, and just come back. But I was previously, just before that, for about 1.5 years, nearly 2 years in Ghana, or based in Ghana, and then traveling around Africa. It's quite a good hub to operate from. So, and obviously we're on a couple of projects at the same time. So, yeah, based back in Nigeria due to sort of operational issues here, but looking after the whole of what we call the rest of Africa, so everything above Southern Africa, basically.
Perfect. Before we review together the trends of investment and development in Ghana, I'm going to ask maybe Holger to describe what has been to work and to be in Ghana on development project during this pandemic. I mean, what challenges did you meet? Any specificities proper to Ghana that weren't seen anywhere else? Holger?
I've been muted, apologies. So thank you, Ivan, for that question. I would say it is fair to say that 2020 was first and foremost the year of the unexpected. And I'm not even talking of the pandemic itself, that 1 year ago I would think nobody of us had on their books. But we witnessed an exodus of employees of the international companies and of embassy staff in March and April. Those of us who stayed back in Ghana, I've been here all that year, we witnessed a very calm country, very well managed pandemic response, very few hospitalizations, thankfully very low mortality rate. So much of the anxiety that was felt around the world did not even affect us here to that extent. We witnessed a situation in which mortgage lenders, or let me start first with the sales that is or working for as developers. Of course, during the lockdown, which was very short, 3 weeks in April, our sales were down. But after that, we were greeted with several very, very good sales months that absolutely made up for the sales that we lost during the lockdown. And interestingly enough, mortgage lenders stopped lending to diaspora altogether, whereas the number of our diaspora clients increased in 2020 over the previous years. And whereas it was very difficult to get construction finance, clients accelerated their payments, even overpaid their payment plans. We had the impression they trust us more than banks. So all of that obviously was totally unexpected. And we are still shaking our heads in disbelief that this year, we now looking at the numbers, year on year, we are operating on a normal case scenario that we drafted in November 2019 without even being aware of Corona and the pandemic that would ensue. So our challenge has been mostly the unpredictability and the necessity to pull through, to continue with operations, to keep the sites running. Few supply challenges, especially when it comes to materials, for example, like kitchens and things like that. But that can hit you in any year. This year, possibly it was a little bit more intense, a little bit more acute. But thankfully, we managed to pull through, and our challenge right now is to meet the expectations, the price expectations of landowners with the somewhat subdued market expectations that we have to be able to build up a development portfolio and development pipeline rather for the next coming years.
It's interesting what you're saying. I'm just wondering whether it's linked to the fact that you're operating in the residential space rather than in the commercial space. Chris, I mean, on your side, what are you seeing in terms of trend on the commercial side, meaning office, retail? Do you have any specific view on this with regard to the Ghanaian markets?
Yeah, absolutely. I mean, I think, yeah, Holger's been privileged in that sense. Where
It looks like, yeah.
Yeah, whereas primarily, you know, in the residential, which is great, which in probably long term is also a very positive sign as well. You know, I think Ghana has traditionally also fed off, and from a residential point, I think some of the Nigerian brothers have gone across and invested there, and you've always had that sort of dynamic as well. But this has been a little bit different this year. In terms of the commercial and retail, I think it's flattened out dramatically. I think. You know, and I don't think it has anything to do with COVID. To be honest, I think it's been a general trend already starting last year, where a lot of the, let's call it the traditional international investors have come and gone. Some have completely disinvested after constructing. Others, you know, made some rather what I would consider maybe unusual investment decisions and where they located the investment. So there's been these sort of dynamics, and I think everybody's adjusted or is adjusting maybe still, but I think primarily adjusted, and I think that bodes incredibly well going forward. You know, I mirror it very often on the Nigerian context, where we saw that a couple of years prior to this happening, and went through the same sort of loop that Ghana's gone through. I think a lot more dramatically because the economy is very much a single commodity entity. So you do find those fluctuations having an impact. So when the sort of international investors, you know, ran away and disinvested, you know, there was a big void, and it was also mindset to change. Whereas we're finding now that that in terms of our position, 90% of our clientele are actually local people in Nigeria. And we're starting to see that coming through in Ghana now as well. So that for me, that's fantastic, because we then become completely less reliant on international decision makers, as it were. I think they've certainly spurred the investment and the development side, which has been necessary. People have got local people's maybe got a slightly different view of how things are done. But there's a benchmark of measure now that people can start using, and hopefully there's a little bit more sensible investment models come through now.
Yeah, thank you, Chris. Keep that thought about international investors versus local and regional. But before we talk about that, I would like to go back to Holger about residential. I'm very curious to hear what he thinks in terms of rationale why the residential market is doing so well. Because after COVID, especially on the higher hand spectrum, you would expect that with lower expat community, with income being hit by COVID and higher unemployment, that the residential will also take a hit. I mean, how do you explain your optimism about the residential market?
Well, I think there we need to differentiate between the sales and the investment side. And on the investment side, I need to be completely honest. We have seen an adjustment, and that I think even with the international, even with the expats return, and Ghana maintaining its role as a kind of a hub for West Africa, for international companies and international organizations. We are seeing that continued supply in the premium segment. Rents have come under pressure, and we've seen a downward adjustment of 20 to 25% over the last 2-3 years. So that has certainly affected yields. At the same time, we are not below, let's say, or we are still competitive on an international comparison, and this is why investors, local investors and diasporans are still interested in to buy residential real estate in Ghana. And at the same time, we do see a growing African middle class. We've all heard the story about Africa. Been disappointed that it is not happening as fast as we were expecting, but we see that the industrialization policies of the current administration are taking roots. That in the agri processing segment, there is substantial more activity, more well-paid jobs. In automotive, hope that is being in its nascent stage, but is expanding. Telcos and finance sectors, these are all areas where people are earning a sensible income that allows them to invest in real estate. And this means that we have a growing local market, just like Chris was saying, which makes dependent on the perspectives of international investors. I must also concede, though, that us at Clifton Homes have possibly seen the light at the end of the tunnel a bit earlier than others, and which has to do with us being a very trusted brand. We have handed over nearly 1,000 units, and all of them on time or even prior to the contractual committed deadline. That means that people know where they're putting their money and what they're getting for in return. That certainly has helped us. And then we operate on the premise of urban well-being. So we have a development concept that does not only focus on the individual apartment, but on clients being part of an environment that allows them a lifestyle and allows them a healthy setting that makes a lot of sense, especially during a lockdown or in a time when people are working from home. So that certainly helped us as well.
Okay, perfect. Thank you for this. Chris, back to you and the international investors, or the disappearance of international investors. I'm going to push you a little bit on that, because it has been, one of the issues about Ghana, as it is for Nigeria, is local currency, and the fact that there is a constant devaluation of local currencies, and therefore, if you basically charging in cedi or naira, and your investors are in dollars, you basically you're hitting a wall one day or another, and we've been talking with API for too many years about the arrival of those regional investors, the local pension funds able to invest in local currency. I mean, when you're talking about the fact that you're seeing more and more local and regional investors, are we talking about those particular pension funds and insurance companies, or are we talking about the usual high net worth individuals that were already in the market at the time when international investors were already there in 2015 or so?
I mean, probably a little bit of both, to be honest. I think the investment, let's call it model for want of a word, not necessarily just on the financial side, but in terms of the product that's been offered. We would have 30,000 or 40,000 square meter GLA office being developed. Or a 30,000 square meter retail shopping. Now, on the retail side, it was primarily driven by South African investors who brought all the tenants with, or a large portion of it, which made it sort of feasible in that sense, and created a product that they could put on the ground. Obviously, they had to then develop it, and I think a lot of those have gone through that well. I mean, we're looking in Nigeria, for example, where some of those operators, tenants, are now pulling out as soon as the leases are coming. It's just not affordable for some of those reasons you say. The value of the cedi in terms of Ghana has devalued 25-30% over the last sort of 18 months or so. So I mean, that's a real thing. If you leverage against it in dollars, you're going to feel that. because you can't do dollar leases anymore, so, I think all of these little dynamics have played, but I think what we are seeing is in the foreign investment is that the guys, let me put it, it's in a sense more sensible or more regional thinking, where it's not 30,000 square meters of GLA, it's 10 or 8,000 square meters of GLA. Fill probably 75% fairly quickly, not huge footplates, lots more subdivisible. Before you would have to take a 500 or 800 square meter on a footplate at a ridiculous rental. Now you can get 150 squares on a brand new building where there's 5 other tenants in the same floor plate. So
I understand.
It's those sort of dynamics that are starting to take place. Sometimes that doesn't work for the international investor who needs a 70% or 80% pre-let situation, and he needs a whole lot of decent lease covenants. So I think it's that sort of sense of the model has changed in investments. So there are definitely foreign investments. Even on the housing, on the lower end housing, there's massive investments that we are seeing coming through that we sort of partly involved in at the moment in Ghana. So the dynamics are changing and have been changing, and I think everybody's suddenly catching up to those dynamics, which is maybe happened a year or 2 years ago, and I think everyone's catching up beyond the loop. So I think it's more that sense. I mean, and let's be honest, we need foreign investment in any country. It's good to have that FDI. And in construction, the more cranes you've got with FDI, the better, I suppose.
No, exactly. I think even this morning, I mean, one of the participant was talking about the lack of FDI in Nigeria, and the fact that with this lack of FDI, it was impossible to catch up with the younger population, with the fact that growth is not very exciting, especially on the Nigerian parts. It is a good point. Olga and Chris, you're both focusing a lot on the development side. What I would like to understand what are the new measures that have been taking place because of COVID of course in Ghana, but I'm assuming it's the same elsewhere, that are now going to stick post-COVID pandemic. I mean, I'm talking about, for example, on the people side, new working conditions, on the project side, new design, on performance side, possibly remote teams and improvement in procurement processes. I mean, Olga, maybe we can start with you on this.
Thank you, Ivan. So we think we as a company will continue to work along this concept of urban well-being, which, as I mentioned, it makes a lot of sense and has resonated with our clientele. We are looking at how much we need to change the programming of our residential units, how much of a home office space will actually be required. And I think there is a considerable demand for that, and not necessarily because it's feeding that back to us, but speaking to companies in the finance, in the telco sector, it becomes very apparent that the kind of flex working that was a must during the lockdown and has been kept since then is here to stay. That managers in these industries are talking of 20 to 30% of their workforce not returning to the office on a permanent basis. We're seeing a lot of realignment of corporate real estate, with on the one hand starting to creating hubs that are a little bit closer to the location of the residential employees, so that they can work from home, but if they need to go into a meeting, they don't need to come to the head office, but can go to a local node. At the same time, the regional branches are being closed because much of the business, for example, in the insurance sector has moved online, and it is trends closely to see what of that spills over in the residential requirements of our clients. When it comes to when it comes to our procurement strategies, we are putting much more focus than before on the resilience of the supply chain of our suppliers. We are sourcing significantly local, wherever necessary internationally, but we ensure wherever we get our products from that the suppliers can explain to us very well how they're getting the materials into country in a reasonable amount of time. So there we work on making our supply chain more resilient.
Mm-hmm.
Yeah.
Okay, good, very good. Chris, I think I know we have a PropTech discussion tomorrow, and this is the flavor of the day for the moment in our discussions. And I'm saying that because I discussed this point on a previous panel at API with Tim White. So, but I would love to have your views on this. I mean, are you truly seeing in Africa or in Ghana in particular, changes in the way people are working on development side? Because it seems to me that, okay, it's something that can work, for example, because the broadband infrastructure is there, possibly in the Middle East or in Europe. But I mean, are we seeing these new technology changes in the construction arena also in Africa?
That's a big question. I mean, yeah, it's a subject on its own, I suppose. But I think they are coming through. You know, definitely. I think it's at this point in time. Well, there's probably two. There's the physical and the non-physical side of it. I suppose on the physical side, that'll take a little bit of time. We are seeing maybe, you know, where there's been opportunity to do these sort of modular type packages. Especially on hotels, you know, there's been some challenges in the past, but that seems to be getting a bit more and more fluid. It's not necessarily a cheap upfront cost, but certainly when you take the time period to roll out a project, especially in Africa, you know, in this sort of West Africa region, you're talking about 5-6 years. Whereas if you do it with the modular, you're probably at least halving it. So your prelims and your upfront costs and your carrying costs and all those sort of things are dramatically reduced. So, but it's a product that is not for everything. You know, it's not a 4-season hotel that you go and build with modular units. So you know, it's built as, you know, the right environment. It's good. I think in terms of there's a lot of change happening up in the upfront stuff before you get to the site. And that, you know, we're seeing it with the BIM in particular, which is having a massive impact, and one has to adapt and has to grow with that. So, and that's having a huge impact. You know, I think about about 3-4 years ago, I just can't remember exactly. In Nigeria, we were doing a retail center, which never got to site, but it was being done by a large British investor. And we did the whole thing on BIM. And there's different levels of BIM, but we went and had the model checked every so often. And we started out at about 60,000 clashes, as they call it. And we ended up at about 3,500 or 4,000 clashes. So now let's say that's almost a perfect design in a sense, because you know, what they talk about a clash is maybe a millimeter difference on the floor plate where you join the demising wall. So it becomes a little technicalities, but what it does do, and the contractors have all been pushed into doing it, the local contractors. So the bigger guys in town are starting to adopt and able to work with both in Revit and with BIM, which means that they're able to benefit from that. The takeoffs that they do when they do the measuring and all these sort of things are virtually there before they start. So from their point of view, it helps them with going back to the procurement issue. You know, they can plan procurement a little bit more accurately. They know the quantities a lot better. Some of the mechanical guys can even devise a better design, you know, using it. So there is definitely, technology is moving forward, and it's certainly reducing the time. But projects are becoming more and more complex at the same time. So
yeah, no, of course.
Yeah, from a technical point of view, which is great, and it needs to be done. But I think it's definitely, I think we're starting to see, I think the more, more emerging markets obviously there's a bit of a lag in that development. But there's certainly guys who got, got the guts to go out and do modular hotel, for example. Things like that. Again, it's only, there are practical challenges. For example, on the modular unit, you could probably do it in Accra, but you couldn't do it in Lagos, because to get the unit on a container from the port to the site in the center of Accra, you've got a chance it's going to be in one piece still. But in Nigeria, in Lagos, you've got a bit of a bigger challenge. So, horses for courses, and one needs to be, nimble. And if you're not nimble in these parts of the world, you're not going to make it anyway. So it does require a lot of ingenuity, a lot of flexibility. Yeah, and I'm preaching to the converted out there.
Yeah, this is Africa, my friends. Unfortunately, it's about time that we need to leave. But I'll ask you. I would like, before the conclusion, I'd like to ask one final question to Holger. When we're talking about Ghana, we're always talking about Accra. It seems like there is nothing else in Ghana than Accra. I mean, are you at Clifton Homes looking at secondary towns like Kumasi or other towns in Ghana? Do you think there is some markets for higher-end accommodation in other parts of Ghana? Holger, I think you froze there.
Apologies, I was muted. Thanks for that question, Ivan, because I think it's very appropriate. Ignore that Kumasi is the traditional capital of the Ashanti Empire, is nearly as large as Accra, and there is a lot of money in these parts, and there is a lot of investment in real estate. We as Clifton Homes have not entered that market because we need to stay very close to our clients. We are not necessarily a developer anymore, but we realize that you really need to understand your people, your clientele, and Kumasi is different. Yeah, Kumasi is very different, and the development that is taking place there is a lot of by local developers. Some of them are also larger with very good products, but something that we are reluctant in market that we are reluctant to enter. And when we're in the other option, the other location that many are speaking about, of course, is Takoradi. But there are very different ways to look at this town that is, let's say, the bridgehead of the oil and gas industry in Ghana. My experience in Nigeria has shown me that the onshore footprint of the offshore oil industry, especially once the wells are sunk, once the production is established and production operates via FPSOs, the online footprint is very, very small. Money that is the revenue sometimes seems to rather bolster the property market in London rather than in the country where the oil is being won. So the Takoradi port offers some opportunities for industrial development, and West Park, a Black Ivy development, is banking on that. They are slowly winning tenants. It's not been easy, but for residential and mixed use, as we are producing, as we are developing, we don't see the market there. So for us, it is Accra, but it is because of our company rather than because of the in the market, because if you were only looking at that, then Kumasi is certainly a very attractive proposition for you in the residential segment. When it comes to formal retail, it's already difficult, and you won't find a great office space in Kumasi, and nobody has ever thought about it, but because there is no demand by it in that end, that then would make a 12,000 square meter GLA development feasible.
Okay. Chris, API gives us a few more minutes, so I'm going to ask you. You have very strong experience in Ghana, very strong experience in Nigeria. and I mean, what I found really interesting is during these every year when we're talking at WAPI, we're talking a lot about Nigeria because I mean the size makes it that it is a very important player. But if you were to sell Ghana to an international operator or investors, how would you sell it if you compare it to Nigeria? Why would anyone go to Ghana rather than Nigeria, which is a more mature market? It's much more deep in terms of market, in terms of consumers. Why would anyone go to Ghana?
Yeah. I mean, yeah, it's actually a fairly simple answer because there's very clear definitives. You know, it's the airlift and the airport is a huge factor. I know it's fairly new over the last few years, but it makes a massive influence. And even before, it wasn't too difficult. So that's a huge, you know, from a business point of view, you don't want to spend an hour, 2 hours. I know it's improved here in Nigeria, but it is a huge factor. I think that, you know, power supply is a lot more consistent. And easier. The general infrastructure seems to be a little bit better as well. And from an import point of view as well, you know, the ports and the system, I mean, they've got an incredible computerized system there, which is basically paperless. It's about 2 years old, a year old, I can't remember exactly. So, you know, if you're a foreign investor, when you're coming to set up a factory, for example, there's 2 motor plants that are going to open up shortly in Ghana, or they're going to start developing the warehousing for it. So, you know, it was a decision why they went there, not Nigeria, and those are probably huge factors in the whole scheme of things. Paolo, thank you. 3 automotive plants. I couldn't remember exactly, but yeah. So, you know, there's definitely there's pluses and there's minuses. Obviously, Nigeria has that critical mass. I think we need to also define that critical mass a little bit, because everybody talks about, you know, the sort of 170 or 200 million people, but, you know, the buying power of that is maybe what needs to be dissected a little bit to understand what market one needs to go into. So yeah, I don't know. Is Ivan around still? Has Ivan disappeared? Looks like Ivan's gone. Look, Holger.
That's my impression as well. Chris, I completely agree with you what you're saying. I think there's one aspect that has for that a choice for companies that are considering to bring in senior staff. It is easier to send somebody to Accra than to Lagos. And even me, I have family in Lagos. I love the city.
Can anyone hear me?
Yes, Ivan, we can. I don't mind my family in Accra, at least as long as the kid is little.
Definitely, I think you know, all those sort of soft issues. Definitely do play a part. You know.
Okay, I don't seem to have. Apparently, people can hear me, but don't seem to have the image anymore. I think it's time to give back the floor to Kefir for the next session, which is starting right now. So thank you, Holger. Thank you, Chris, for your time today. I think it was way too short to have an in-depth analysis and review of the Ghanaian markets, but I think it gives a good overview of what's out there. Thank you again. Thank you, API, for organizing this event. And